Hello, Sage Seeds. By the end of this video, we're going to be familiar with the story behind the numbers of the Glimpse Group. What are they glimpsing? Let's dive in so that our wisdom can blossom. The balance sheet. Significantly less cash. Company's assets being chomped by almost 40%. We will definitely need to see a good explanation for that. Income statement. The questions continue because revenue has almost doubled in just the last year. Very high growth rate. Maybe more importantly, the gross margin has improved by, that would be almost 15 points. So we have a very disturbing balance sheet. However, this income statement is about as good as it gets, in the top line items at least, because here in operating expenses, we're seeing escalating research and development, escalating SG&A, very escalating marketing expenses, and then some intangible assets impairments, which are just never fun. But certainly not fun when they represent more than all of last year's software services revenue. So far, this company doing nothing normal and punching us with both good and bad that demands attention. Definitely a way to start out the new year. Statement of cash flows. We should, however, try to understand the context. The impairment of intangible assets, giant number in the latest year, usually is a one-time thing. When we're looking at the working capital section, there has been an almost 10x swing in this row deferred revenue. And this swing is headed in a very good situation for the company. In conclusion, for the opening move, almost every single thing we've seen we could follow up on. This is telling us that this company is definitely at a pivotal moment. We have to start by narrowing down what was that intangible asset impairment. It's just too huge for us to focus on anything else. And then we want to understand how the gross margin is heading in such a great direction. That will likely take us into the direction of the deferred revenue. The Glimpse Group is an immersive technology company. VR and AR, this is the virtual reality company for the US, Turkey, and Israel. Very interesting set of customers that they've been focusing on. As we are scrolling, we are seeing pages and pages and pages of different acquisitions. There's a lot. It can become difficult to accurately measure your assumptions when juggling so many acquisitions. Their impairment last year was more than all of revenue combined. That's a big mistake. Here they're explaining that 14.8 million of it was tied to one acquisition. And so I was seeing almost a dozen different acquisitions. They only messed up with one. The company was called S5D, and after the acquisition went through, there was loss in revenue from key customers. A company that depended on a small number of very important customers. After the acquisition went through and these customers realized that they're now customers of the Glimpse Group, they actually decided to leave. These customers were so important that it actually spilled over to a complete nuking of the assumptions for these acquisitions. Let's not even try to salvage anything. Let's not market S5D. Let's not try to revive it in any way. This company got very unlucky with how bad their mistake is costing them. And it certainly is the sort of mistake that the company could learn from, especially since they're being so conservative in trying to make up for the mistake already. We've also now found a very helpful explanation of their deferred revenue. This was the positive that we saw in the balance sheet. How is it that their gross margin was improving so quickly? This table is showing two things. Earned revenue is decreasing, cost is decreasing even faster. This earned revenue is coming from acquisitions. These are customers that the company really had no plans on ever serving without the acquisition. This company has AR/VR technology. It acquires competing AR firms. It then starts to wind down the competitor's technology and replace it with its own, which is more cost effective for the company. Not all the customers from these companies stay with Glimpse Groups after this switch, but some of them do, acquiring customers in a bit of a whack-a-mole fashion. Because there is so much activity and ideas and technology in this space, that necessitates the company expecting that a lot of customers are going to bounce around and try different AR firms. We now know that this company is very much aware of how its financials look. Pretty dramatic and confusing, but it does have a pretty simple explanation.
Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe.
This line here, cost of goods sold, as a proportion of the revenue, they can keep this line smaller than most, if not all, of their competitors, more cost effective. The game they're playing is buying companies to take their customers, knowing that not all of them will stick around, get revenue, lower costs, get revenue, lower costs, over and over and over again. I'm being a little harsh here. Very trigger happy with acquisitions because they're banking on the fact that they can do a lot of acquisitions, almost tripled down in the latest year, starting a lot of new acquisitions. The evidence of that is this very top thing. The first thing we notice, their cash has decreased substantially because they're so happy with this, because there's so many AR companies out there. This company trying to do it again, but bigger. On this channel, we've seen multiple acquisition-focused companies by now. We've seen huge companies like Coca-Cola. We've also seen much smaller companies like Leonard Homes and Orbital Infrastructure Group. It is the sort of game that makes management teams legendary a very small percent of the time. Most of the time, it leads to a lot of complex transactions, constantly having to depend on people who do not have your best interests in mind. With that said, I have no clue. I have no clue what is about to happen. The gross margin speaks for itself. That is tremendously difficult to pull off, and they have. The only thing that gives me pause is that I don't fully understand the specifics of how they pulled it off, and yet they're doubling, tripling down to try to do it again. If they do it again, then simply wow if they pull it off again. Please like and subscribe. We're now going to call in the Sage Seeds AI to get its take. Remember that this channel is all about hearing the stories behind the numbers and then developing an intuition as to whether these stories do or do not represent value in current markets. I'm hoping we all build that intuition through practice. Whether the Sage Seeds AI is about to give this company a high or low valuation ranking. Please take a moment to guess. It's tremendously helpful to verbally explain or at least write down your reasoning if you are able. Go ahead and do that now. Glimpse Group VRAR is ranked 71 out of 72 in value for the 2023 season, placing it into the 99th percentile. I'm not going to interpret what the Sage Seeds AI is picking up on. As the annual statement focused on, this company has already strung together acquisitions with this assumption that it can generate value when customers don't stay. It already did that. It already worked. This low ranking is coming from, even if there's a lot of value being created through acquisitions, fundamentally, this industry of AR is not a very attractive industry for investors. Constant research and development just to get a chance at paying exorbitant marketing costs. The marketing in this industry is very insane. The lack of loyalty amongst customers of their competitors applies just as much to the customers of the Glimpse Group. Disloyal customers do not make for efficient, stable businesses. All of those little things adding up to lower the ranking. The precise size of this tripling down is much more than tripling down, to the point where I actually had to pause and spend a bunch of time double checking that there wasn't something wrong with the data input feeds. Apparently there isn't. Thanks to the Sage Seeds AI's calculations, I can now say that this is not a tripling down. This is closer to a 20, almost 30x. I don't even know what to call it, a 30ing down. This company basically pulling the trigger on every single AR competitor it could find in the latest year. The last time it did this, it quote unquote worked. It worked with one mistake that cost it $15 million, a lot of money for this company. If there are no mistakes, there will be a lot of profit here in a couple years' time. But it is very nerve-wracking to think of what even one mistake will do to this company, plummeting the ranking of Glimpse Group. Not necessarily a lack of profit potential here, but a downside that is risk in the most extreme definition. Let me know your reaction in the comments below. Thank you for watching until the end. Share your wisdom, share this video.